Well, I'll get started. They can join in when they get here. So, my name's Kevin Hubley. I'm a CPA here in town. I was asked to come today and kind of give a brief overview of accounting and some tax issues that you guys may encounter as small business owners. So, just for my perspective here, does everybody do some moonlighting or have a business that they're not just an employee? So everybody kind of fits in that. Okay. So, well, as you know, owning a business is and running a business is a difficult task at best, and probably the thing that most people do not like to do is deal with the two issues that I'm talking with. But when you look at success of small business, those that get a handle on their accounting and get a handle on their taxes are the ones that generally succeed. So, as I started out, I kind of said, tax issues and that, accounting and tax issues, and I really, as I thought about it more, really structured it in a different way. The first part I'll talk about is really some pitfalls that I see small business owners run into. I'll transition then into some best practices. So over the years of my experience, the things that I see the successful companies doing, and then kind of segue into a few tax issues towards the end. I could spend a day or more talking about this, so condensing it into 30 minutes is a little bit difficult, but at any time feel free to ask questions. I'll leave some time at the end also for questions and that, but here we go. So, pitfalls. What are some pitfalls that business owners run into? First, commingling your business and your personal finances is generally one of the first no-nos that you run into. It becomes very difficult to manage your business, segregate, and make sure you're not missing anything from a tax standpoint. So, when you have one checkbook to run two things, generally not a good idea. Making accounting kind of the last thing you do is generally not a good idea either. So companies or owners that decide, well, it's November, I better see how I did this last year. Probably not gonna be a very successful business in the long run. Not understanding some basics of accounting. What is a business deduction? What should I be keeping track of for not only accounting purposes for business management, but also for tax purposes. Sales do not equal profits. A lot of people say, hey, I'm making sales, money's coming in the door, I must be doing something right. Well, that's only part of the equation to be looking at. Not managing expenses. So, I guess the approach of, hey, I got money in the bank, I'm just gonna go, get whatever I need, kind of falls back into, I guess maybe living beyond your means. So, making sure that you're keeping a good eye on expenses. Not managing accounts receivable. He's a good guy, or she's a good person, she'll pay me, I know she's good for it, or he's good for it. Don't be the bank. Have the customer be the bank, not you. Paying expenses with cash. Don't see this quite as much anymore, but if someone's paying a lot of expenses with cash, it's hard to track. Receipts disappear. As a result, you lose some management expenses from a management perspective and from a tax perspective. And this one, it's last on my list, but as I've thought about it, it's probably something that I would put more, probably as the #1 priority for anybody that's forming a business or in a business as a partner. So you have one or more people running a business. If there's nothing, and I guess it's become a priority of mine with any of my clients, you have to have something in writing that documents not only your partnership, but what happens if there's a death, there's a disability, if there's a disagreement. I've seen too many great friendships that started as a business. Things went well for a couple of years, and then something went wrong. And had a document like this been in place, probably things probably could have been resolved very quickly and easily. Instead, things blow up and get, mountain is made out of a molehill. So that's generally one of the biggest pitfalls that I've seen through all of this. So, as the things not to do, these are probably the top 10 things. So now, turning the table around, what are the things to do that are going to make you successful? Those things that are going to make you buck the trend of small businesses that don't make it. A lot of times it's not because you don't have a good product or you don't have a good service. It's something underlying that you're not tracking something well from a management perspective, so you don't know how much money you're making or not making. And then the last part of it is that second guarantee in life is taxes. So so best practices. From a best practices standpoint, make your accounting process a priority. Your service and your product has to come first, but your accounting process should come a very close second. Again, your accounting process is going to give you all the tools and information you need to make good business decisions, and without that, you kind of flounder in the water. So make it a priority. Stay organized. Organization, you've got to be organized. In doing what you're doing, delivering your product and service, there's a process just like there is for your accounting. So being organized, have good books and records, have a good process in place, and that's going to go a long ways. I said a pitfall was combining business and personal. Best practice is to separate the two. It's not a requirement, but I highly recommend to any client of mine that is going to run a small business to have a separate checking account, a separate credit card for that business itself. It makes life so much easier for you guys when it comes to monthly expenses, and especially at the end of the year when it comes to taxes. You have everything in a very concise one spot. It's not a matter, you're not having to go through a checking account and say, okay, that expense for Newegg, was that for my personal computer, or was that something that I bought for a client? So separation of personal and business is a high priority. Track your expenses. And from a tracking, when I say track expenses, everything that's done on a credit card, via a check, a debit card, those are easy to track. Things that maybe aren't so easy to track is your travel expenses, your business mileage that you're driving around. There's a million different apps out there that you push the button when you leave the office, and push it when you hit the button when you get to your destination, and that can integrate into your accounting system. So having that system, whether it's an app, whether it's a a filing system, having that, and that really kind of goes back up into the second bullet point of just being organized. Invest in a good software. There's hundreds of softwares out there. The one that we probably run into the most is QuickBooks. It's fairly inexpensive. It's pretty powerful in what it can do, but it's not the only software out there. But investing in something that's going to fit your business is going to make probably the items listed before it that much easier. Have a plan for reviewing your business finances. Whether that's going to be weekly, monthly, quarterly. As your business grows and the numbers and the activity increases, having a set period of time where you're saying, okay, I'm end of the month, I'm going to look and see where I'm at. Review my expenses. I'm going to review my income that's coming in. I'm going to review my receivables. Who still owes me money that I need to contact, so I ensure that I get paid for what I do. Not, I'm just going to leave it up to them whenever they want to pay. So having that process in place, again, is going to just make everything really come together, but also ensure that you've got you're setting aside a time to really make sure the business is going financially in the direction you want it to, not where you think it's going. Have a plan for major expenses. Thankfully, for you guys, costs of computers and hardware and software have really come down over the last 20 years, but they still are major expenses. So have a plan in place so it's not all at once you've got to buy 5 computers and 3 scanners and upgrade all your software. If you can have some sort of plan in place that says, on an annual basis, I'm going to do X, Y, and Z. It helps your cash flow. It'll help you from a planning standpoint, and then it also just helps that, boy, I don't have to have a $15,000 because I got to do everything all at once. So, having a plan. Plan and prepare for taxes. A lot of times this is the last thing on your mind, first, I want to get that product or service out. 2, I want to, go enjoy what I do. And 3rd, I hate April 15th. So, having a plan in place so this does not come up and catch you by surprise. And the inevitable is the annual tax return. The thing that can be done is at least the opportunity for some planning to help ease the sting of April 15th, and that we'll touch on some of that here in just a minute. Hire a professional. I guess maybe this is a plug for CPAs, but not necessarily. Whether it's a bookkeeper that helps you do some of these best practices, or it is a CPA that can help in that planning and in that preparation process. As a CPA, my life revolves around accounting and taxes. It's probably not something that's real high on your guys' priority list or strength. So having that expertise is something that I would recommend. Yeah.
On that, hiring a professional, is that just sort of hire them in your weak points, like where you're weak at, hire the professional, or?
Yeah, I would say, it could be hire them in your weak points, so, maybe you want some help from a bookkeeping standpoint. It doesn't necessarily have to be a CPA. It's, someone that's got knowledge in the accounting that can help, supplement where you need that help. So, it doesn't have to be an all or nothing. It certainly can be, you know, more of an a la carte where, hey, I need help with these certain pieces, and there's people out there that can do it. So, you know, as you start your business, you know, a lot of this might be a little bit redundant, but you know, I think just good things to be asking yourself as you do get going. So as you start your business, you know, is this business going to be full-time or part-time? Because I think if, depending on the answer to that, it's going to drive how you set yourself up from an entity standpoint, or how you really set up your books for accounting and for taxes. So full-time or part-time, your business entity, are you going to be a sole proprietor? Just you know, working part-time, doing a few odds and end type things. You know, sole proprietor is going to be the easiest thing to get you going. Are you a limited liability company? You know, this is probably getting into come into play when, you know, there is some, you know, potential liability issues that you may have. You know, is there a chance that because of what you're doing, you could get sued? So having a little bit of protection there may be what you want to do. Do you want to be? Are you going to be a corporation? You know, are you going to be the next Oracle? Are you going to be the next Right Now Technologies? If so, then you know, you may be looking at, you know, forming as a corporation. Whatever you choose in the beginning doesn't need to mean that that's what you're going to be from now until the end. You could move, you know, through the different models, or you could pick one, and that could be it for the duration of your business. So, but how you set up initially is probably going to fall back into that first question: is it going to be part-time or is it going to be a full-time gig? Books and records. How are you going to address the accounting needs? And again, I think this just goes back into the best practices part that I just talked about. You know, are you going to do this yourself? Are you going to hire someone out to help? You know, but ultimately, what are you going to do to make sure you set yourself up from an accounting standpoint to be successful? Organization. You know, from an organization standpoint, you know, how are you going to maintain your records for expenses, for business-related items? Are you going to be the Shoebox owner? I do not recommend this. Shoebox owner is the guy that has a shoebox, and every time he has a receipt, goes into that shoebox, and at the end of the year, it's helter-skelter. So don't be the shoebox. Accordion folders, you know, these are great, but they kind of seem to be the, you know, that was your grandfather's method, you know, when paper and pen were the way of the world. PDF now, you know, as you get those items, scan your documents, have an organizational method within your electronics, and you know, that's where I would see, you know, everybody in this room probably trending in terms of keeping their books and records. But at a minimum, have that organization, so if you are ever questioned on an expense, or you have a question on, you know, what was that expense at Owen House, you can easily look back. Software, you could go from anywhere from being as simple as Excel spreadsheets to Quicken, which is essentially a electronic check register. That's about all it does. It'll generate some reports for you, but it's pretty limited. QuickBooks, depending on the complexity of your business, may just be the fit. If you're having to do invoicing, if you have payroll for employees, you know, that's probably the route you're going to go. First one, you know, Excel everybody should have Excel. That's some costs for those. Then you get into some online software, Xero, Mint. Those seem to be the two that I see more often than most. Xero is really kind of a watered down version of QuickBooks. Mint is, I don't know if anybody's familiar with Mint, but you just link your various accounts to it, and it downloads the data for you, and over time kind of learns your spending habits or your vendors, so it categorizes stuff for you. So timing is, how often are you going to deal with your accounting? Most businesses, I would say daily, just because if it's daily, maybe it's 5 minutes, 10 minutes, and you're done. But realistically, you might be looking more at weekly. I wouldn't go out too much further than that, just because the more you go out, the longer you go out, the chance of things slipping through the cracks, or it's been a week, I don't have time for it now, I'll do it next week, and then I'll do it next week, and then I'll do it next week, and then pretty soon you're at November and you haven't done anything. So review your records. What is the frequency of reviewing your financials? My recommendation would be at least monthly. On a monthly basis, you're going to be able to have a good snapshot. Things are going to be fresh. You can make adjustments on whether it's a spending issue, whether it's a pricing issue, but the more frequent you deal with this stuff, the better it is going to be for you in the long run. What you should be looking for as you go through that process: is there cash in the bank? Are your accounts receivable current? So, are there problem customers that are very slow in paying you? If there are, addressing that now rather than later will greatly increase your chances of being paid. Are you paying your vendors timely? Generally what I see is there may be cash in the bank, but John is slow on paying me, so I've got to be slow on paying someone else, and it kind of snowballs upon each other. So the second and third piece really are interconnected in many ways. And then the big picture: cash in, cash out, net income. So are you making money or are you not? From a tax standpoint, what are some things you should be thinking about? Well, you have your annual filing. If you're a sole proprietor, you're going to have your Schedule C, which is your summary of income and expense every year. If you're a partnership or a multi-owner LLC, so 2 or more owners in the business, you're going to have your partnership tax return. Or if you're a corporation, you'll file one of the 2 forms, an 1120 or an 1120S. What are your due dates? If you're a partnership or a corporation, you're looking at March 15th as your deadline for getting those returns. And then the dreaded date every year for all individuals, April 15th. So the last piece, and again, this is going to be a very brief topic, but it's probably one of the biggest ones that you'll run into as a business owner. What can you do within your business to keep taxes manageable? And I guess the way I look at it is, we've got a pie, and there's how do you divide up that pie to maximize the portion that stays with you and minimize that amount that goes to Uncle Sam. So by doing nothing, a lot of times you end up paying Uncle Sam a lot more than maybe what he should have. Going through a planning or review process will ensure that you at least review opportunities for savings and investing in your business and yourself before that final tax check is written. So, tax savings options, capital investments. So what do you need for your business? What do you need to do to invest in it? Investments in your business result in deductions, which lower your profit, which lower your overall tax. Tax deductions. What are those things that you may not think of that help to lower your tax? The obvious things are those expenses that are directly related to your business. Those things that you need to spend money on in order to keep the doors open or to provide your service. Things that may not be thought of at times are vehicle usage, cell phone usage. I mean, a lot of times people, your cell phone becomes your personal and your business phone. So you've got a portion of that you can deduct. If you're working out of your house, you may have a home office deduction. So those are things that come right off the top, help lower your overall profit, which then lowers your overall tax. Tax credits. Tax deductions are a reduction of your income. Our income tax brackets are on a percentage basis. So for every dollar of deduction, you may be saving 15, 20, 30%, depending on where your income is. A tax credit is a dollar for dollar reduction of your taxes. I bring the tax credits up because in the software development world, there are tax credits that are available. They're not easy to get, but they are available. And if you can swap a deduction for a tax credit, I do that every day. So if you think you fall into, if you're doing software development, it's a question to ask your professional that you're working with whether or not you would qualify for those credits. Yeah, you can save, swap out a savings of 30 cents on the dollar for a savings of $1 for $1. I would do that.
I have one comment about the tax credits thing, just to make sure everybody's aware. We just did this at Fountain, and the only reason we could do this, and it was really good credit, is because we kept really, really good records of every single thing we worked on. Like all of our tickets in our, ticket tracking system, who did what, how many hours they spent on it. You can guess on the hours a little bit, but different resources in your company are going to have different value, and depending on the amount of money those people were being paid when they were doing those things, that will actually decide how much of this tax credit you get to take for the business. So keeping, just like everything else you've been saying, keeping really good records of all the stuff that you're doing is super important for this. It took us 2 months of going through our history. We did 3 years at a time, so we kind of did it long, but it's a lot of data. So
it's a lot of data. It's got to, the circumstances have to be right to make it work for you, because there's a lot of information you have to keep, and when it's all said and done, you want to make sure that there is that cost benefit, that you haven't spent more hiring a professional to get this tax credit than your ultimate savings down the road. So, but those are probably the 3 big things that as a business owner from a tax standpoint that you'll want to keep track of. So that's all I've got. I'm very open to questions and